Ladies and gentlemen, K Kim here. Welcome to the daily update. I hope you guys had a good weekend and good day trading today. Market is up actually quite a bit, 3% there on the S&P. Actually, the Russell 2000 is up a lot, and the banks are all up a lot. You can see on top here, you can see Citigroup is up 9%, Bank of America 7%, Capital 1, 10% almost there, Wells Fargo about 9%. So the small caps, the Russell 2000 is up 6%. I think the banks, last time I checked, is above 5% XLF. Qs underperforming today, obviously, because they've been the leader. So it looks like today there was some massive amount of money rotation that has occurred. Basically, the money is flowing into some of these sectors that's been pretty much lagging, while these large tech stocks been moving higher. So that's kind of what we saw today. Huge jump, huge gap up. We're seeing across the board, and a lot of stocks are up today. But let's kind of get into it and try to digest what really happened today, right? So looking at the 65-minute chart here, we've been talking about, first of all, we've been talking about this moving average. This is my shoulder-term moving average that's been declining. Well, obviously with that gap up that we saw today, it is now slightly rising. And you can see coming back here, it is kind of a subtle, but we've, for the first time since I think this was late April, that we have cultivated higher high, right? You can see that these are equal highs, right? Because they came to the similar level there, and that was pretty prominent resistance. I want to actually put another one right there, that vicinity. I think that might be kind of a micro term support going into tomorrow early morning session, right? 294, 292. But if we zoom out a little bit, I think a lot of people are caught up in this potentially head and shoulder formation. I talked about this on the weekend video. That a lot of people are talking about this, like, on social media, on YouTube. A lot of people are caught up in this, that this was some kind of a neckline there, right? This is obviously, and that's what textbook says. And it's very difficult nowadays trying to trade off of a textbook, because if everybody's thinking something similar, the market is going to do something completely opposite. So what would happen, I think, psychologically speaking, what really happened was everybody started talking about this head and shoulder formation, right? Potentially a triple top or double top, or however you want to look at it. It looks like, market gone up quite a bit since, late March, in April. That was some phenomenal move, right? 35% run since the March lows on the S&P. And then we pretty much been moving sideways for the last month and a half or so. And then it feels as though bulls are losing steam, right? It felt as though they're losing momentum. It felt as though it's heavy, right? And then on top of that, a lot of people are so focused on these potentially a topping pattern. And then, finally when the neckline broke, back in, mid-May, as you can see right here. And this kind of stuff happens a lot in the stock market. So a lot of people potentially jumped short or closed out their longs. Some are here. Maybe they waited for this to go back up, thinking that will be the, we also talked about potentially a bear flag. Well, that's the thing about flagging pattern. I talked about that on the last week, one of the last week's video, that these bear flags never played out ever, right? Remember we talked about it since this year, that bear flag never really played out. And so, so when the market is grinding like that, I think it makes a lot of people nervous, and then there's a lot of volatility, right? It just threw out this entire move. You can see gap ups, gap downs, gap ups, gap downs, gap ups, gap downs, gap ups, and downs, and then we saw. And I think this is the first time, right? So because we've been seeing a lot of gap ups and gap downs, I think this is the first time actually we saw follow through down days move. Because we would see these gap downs usually met with another gap up. We will see this gap down usually met with another gap up. So I think when we saw bears bring it down, it kind of made a lot of investors nervous, and potentially it made maybe a lot of shorts are looking for another bloodbath in the market. And that's why, and obviously, we've been talking about that economical data, right? The fundamental data has been horrendous. It's pouring out. I mean, economy still shut down. There are no earnings. I mean, we got layoff going on everywhere. Unemployment rates keep rising, and we continue to have these negative news pouring out. And on top of that, when the market is kind of stalling, potentially a topping pattern along with that, a lot of people get fearful. And that's why I think, if you've been watching my daily update videos, that we've been talking about the longer term trend of things, where we want to continue to give benefit of the doubt to the buyers in the longer term. And we've been navigating through all of this up and downs, right? So as of today, with this gap up, I have to categorize now the short-term momentum, short-term sentiment to be bullish now that I see that is slightly rising higher. And obviously we cultivated it's that higher high there for the first time. It's subtle, but as long as buyers continue to cultivate higher highs and higher lows, we want to continue to give benefit of the doubt to the buyers. There might be another shakedown, there might be another decline, but that's what it means to be an uptrend, is to have that cultivation of higher lows and higher highs. So we have to keep that in mind. As long as we continue in this fashion, in this manner, we want to continue to give benefit of doubt to the buyers in the longer term. In the midterm, remember in the midterm, I've been telling you guys that we're in a neutral zone because we haven't gone anywhere. I think with that, we still need some more work needs to be done, but I want to categorize in the midterm, neutral to bullish now. Before it was just neutral. So before it was bullish longer term, neutral in the midterm, and I was saying bearish in the short term. And this was last week. So last week was a bearish short term. With today's move, I want to categorize this market bullish in the short term, neutral to bullish in the midterm, and obviously bullish in the long term, right? So let's talk about the close real quick. So I think a lot of people are kind of wondering, well, you know what, we didn't see we saw a little bit of selling towards the end of the day. That might be something here. Looks like potentially what it looks like, shooting star type of candle. And I think what happened though was the gap was filled. You can see that there, this is where back in March 6th, that's when the market closed. And the next day, this is where market opened. So there's this big gap down, right? And it took bulls literally it took bulls literally months, like 2 months, almost like 2 months to go up and fill this gap. And so we have to credit bulls for, it took a while, but they got up and filled this entire down gap here. So you can see that's where it came from. So there's a little bit of gap left. Let's actually annotate that just a little bit, just a tiny bit. It would have been better if that gap was filled entirety of it, but bears forgot to fill it, just a little small portion of it. So that's going to be slightly bearish in the short term. So I think that's what happened here. That gap wasn't filled, and then sellers kind of used that exhaustion, and then we saw a little bit of selling towards the last hour. And also, we also talked about looking at the oscillator, that now finally, because remember on Friday, my oscillator was somewhere about here, and we talked about how there's a little bit more room to move. And if that would have been the best way for the buyers to fully utilize, because there was only a little bit of room. looking at this oscillator, like if you can go back and check my weekend update video or the market update video on Friday night, like we're up here, like 85 rating or something like that. We had a very little room move. So to utilize this in a maximum way was gapping it up hard because we're already dealing with the moving average, and there's a lot of congestion going on here up here on this 290, 288, 299. There's so many, there's so many up and downs. So bulls were already losing steam because they already had to work so hard, bring this thing from like 276 to all the way to 286, right? That was already like 3.5% run. And so it was all like bulls were already losing steam. They're already getting tired. So they understood that if they really want to push it, because they know we're getting very, very close to that overbought level, right? And so the best way for them to make the best of what little energy they might have left was gapping it up. So this was actually a good winning day for the buyers. So, but we are at the overbought level now, right? We're here, we're here, and we are here, and we are here. So you can see, even back in May 11th, that made that price to pull back hard. Back in April 27, we saw initial bounce, but then we saw that correction. I think those were like, 5% correction or something like that. But in April 7th, though, however, we actually pulled back a little bit, and then market kept grinding higher for another month. Actually, no, not a month, for a couple weeks before this thing finally came down to the oversold level. So I'll update you guys on this oscillator and the price action going into tomorrow. I think early tomorrow, 294, 292 level to watch, because that's the prior resistance level is 294. And then the gap area, which is a 290 to 92. So bulls want to bulls want to protect those levels, 294, 292. Bears obviously want to come down and trying to fill those gaps as quickly as possible. But again, filling those gaps will just provide strong support. One last one. This one's going to get a little bit longer, but one last one. I let you guys go with this. We've been talking about gaps. We've been tracking gaps, and this entire run since late March, we've been talking about this as a breakaway gap, island continuation gap, another remember, there's no wick here, so that's island continuation gap. Bears should have filled that gap. They didn't. They made themselves vulnerable by not filling that gap. Bulls opened up pretty significant gap. So we got 4 gaps now. So the longer that gap stays open, the better it is. I mean, I said the same thing back in March. I said the same thing back in April, early April. I said the same thing back in late April. All of these gaps, the longer these gaps stay open, the better it's going to be for the buyers. So bears' objective is to come down and fill those gaps as quickly as possible. So bulls are working with overbought condition. They are tired. They only hit a little bit of energy, but they really gapped that up. They fully maximized it. They fully utilized that little bit of energy that they had. So let's see if bears can utilize and take advantage of the situation where buyers are tired at this point. And so let's see what bears do going into tomorrow, and come back for you guys tomorrow and update, and we'll talk about it and follow up, right? You guys enjoy your evening, and good luck trading tomorrow.